Hi, I'm Tom Stelzer from Lively Markets, and joining me today is Joel Fleming from Yarra Capital Management, Portfolio Manager of the UBS Microcap Fund. Joel, thanks for joining us.
Good to be here.
Joel, can you just give us an overview of Yarra and the firm's strategy?
Yeah, so I guess our microcap strategy, it's been around since 2014, so there's good longevity there, and I've been the portfolio manager since inception. So every decision, good, bad or ugly, that's on me. I guess in terms of microcaps, we started the fund because we wanted to leverage that inefficiency that exists in the smallest part of the market. It's been some really good fund managers, produced some great returns over long periods of time who have focused in, and it's an area where we thought we had some expertise to bring a new product to the market. And really it's about leveraging this wide investable universe that's available. You know, it touches the full spectrum of the economy, and that ability to drive long-term capital growth for people and providing some correlation benefits and all of those kind of things. At the end of the day, microcaps are, they're off the radar for a lot of investors, but just the potential opportunity that exists is something that's really exciting. And I think another point of differentiation is our fund only invests initially stocks below $250 million. So we're really trying to fish in that microcap pond and mean that we're very separate from what you might be getting in a small companies fund, for instance.
And the fund's outperformed its benchmark since inception in 2014, and I think you touched on it there, but what would you say is unique about the way that you invest in microcaps? What's the edge that you bring in there?
We think longer term, right? So we don't want to buy conceptual stocks, and that's a bit of a misnomer about microcap investing. It's punting, it's concepts. We want to buy companies that are either on the path, or we believe they have a really strong chance of doing so, of turning into a much more durable, sustainable business. Something that's tapped into a theme that's going to be, driving the top line, improving margins, all of those good things that happen that make the market set up and take notice of what they're doing. So the first thing is we're trying to find real businesses. That long-term thinking, that patience, that's really important too. Everything tends to take longer, everything tends to cost more, but being able to go on that journey with the company and for that to turn into a nice compounding stock in time is something that we think is really differentiated in the way that we do it. And the fact is there aren't a lot of fund managers that have capacity available in microcaps with the track record, and that's something as well that we think stands us apart from others out there. And at the end of the day, there's an untapped part of the market. It's looking like it's improving, getting more interest. The world is changing very rapidly. That's creating huge amounts of opportunity. And so we think it's a really, really good place to be invested and to be looking for those companies that can really go on to become much bigger, sustainable, durable businesses in the future.
And you've been the portfolio manager for the life of the funds, and you touched on it there. Do you think that is the key opportunity in the microcap space, is the long-term horizon there?
I think it's something that works really well for us. Being part of Yarra Capital Management means that I have a lot of other investors who sit with me focusing on their strategies, and the ability to pull insights out of macro and strategy team, large caps, small caps. Everyone's having a lot of meetings, and that's really helpful in terms of us trying to get the most out of the microcap sector with all the internal work that's done. I think the other thing is these companies, you've got to do your own work. There isn't a huge amount of coverage, and the fact is that you can go out there, you look through the liquidity, you look through the early stage aspect of things, and actually go out and find companies that they're truly off the radar. They're doing really good things, and it's something that we think that we can identify companies that in the future can be much larger than they are today.
And what would you say is so compelling about the microcap space there, and especially right now, given how things have changed maybe over the last couple of years?
Yeah, so I think there's two things happening. The first is our investable universe is so big, right? And so if we identify a thematic or a change in the market, so even examples, you think about the data center thematic that came through, now the AI thematic, issues around electrification, all of these kind of things, they're big structural changes occurring in the market. Microcaps allows you to go in and find really niche exposures to those themes. So that's a really exciting aspect of what we do. We also invest in resources. So, that is part of the reason why Australia is such a wealthy country, and the opportunities there, we believe, are significant. And so that idea of the full spectrum, being able to get really niche exposure, early stage exposure, to companies that do go on to become part of the ASX 100 in time. And I think the other thing is, there's been a lack of IPOs, there's been a lot of takeover activity. If you're running a large cap fund, small cap fund, you're running to a benchmark a lot of the time, right? And there hasn't been great change. There's a lot of concentration in certain parts of those benchmarks. That makes your job really hard, where we can go out and look across the full spectrum of opportunities, industries, stage of life cycle, business models, and we can go and find some really diversified portfolio holdings that can hopefully drive that longer term capital growth that we're looking for.
Do you have an example of a stock that's done well for you in the strategy, especially with that longer term horizon?
Yeah, so probably the best way to represent that is to look at some of the companies where, we bought them below $250 million. Stocks like Pro Medicus, Codan, Hub, RPM Global today, hopefully the court date, they'll be taken over. So that's the best part of this opportunity set, right? That things like this happen all the time, that those stocks really over a number of years start to graduate up, starting below $250 million and going on an amazing journey of shareholder wealth creation. And so there are some really good examples of stocks where we found them early. We went on a journey with them. Some of them still held today, mostly aren't. But that opportunity to take something from very small to a stock that every small cap manager is having to think about is part of the attraction of what we do.
Yeah, you've almost answered the question there, but what happens when you have a stock that's at the microcap stage and it progresses up to a small, a mid, a large? I think you've said it there, you can still hold them, but what is the thinking? What's the strategy behind that?
Yeah, so the way that I've always tried to think about this is I've got most of my money in this fund and I don't invest in the ASX outside of this. So I take the view that if we've done all that work early and we've found something and we believe that our knowledge gives us a competitive advantage over the rest of the market about where this company's going to, and we're less focused on the short term, the next data point, that doesn't matter to us as much as where is this going to be in 3 years' time? What's the company doing today? How is it preparing and how is its macro environment changing? That means that it's going to be a much more profitable cash flow generating company in the future. So where we think we have an edge, just because it goes into the ASX 300, I shouldn't be forced to sell there when we've got huge amounts of index buying. If I still think I have an edge as it goes into the top 100, because I'm prepared to look into the future and think that those underlying economics are going to work out better than what the analysts are thinking, we still want to hold these stocks. But there always comes a point where you think, I've captured a huge amount of the value on offer here, and hopefully I've got other places that money can be deployed and we can go out and find the next Pro Medicus or the next Codan. So we never want to have a portfolio full of small and large caps by any stretch. But once you get on a good company that has strong momentum, you don't want to sell it too early and leave a huge amount of value on the table when you've done the hard bit up front.
And what would you say are some of the risks in the sector, especially at the moment, and how are you managing those?
Yeah, so you've got to have a healthy dose of paranoia often doing this. So you're dealing with companies often where, they may be earlier stage, they're more volatile in terms of what they're doing. They have to invest a lot in the cost base to continue to support growth and all of those kind of things. So what matters to us, cash flow is really, really important, and balance sheets, the ability to kind of survive times of stress and things like that. Look, the world's a pretty crazy place. There's been a huge amount of, whether it be geopolitical, we think about tariffs, we think about all these things that have occurred, and markets have continued to rise. So there's always risks. We're always thinking about risks. In microcaps, liquidity is your biggest concern. And, I think after all those rate rises after COVID, we saw a lot of money leave the sector. We're seeing a lot of capital markets activity. We're seeing IPOs. We're seeing people starting to invest back down in smaller companies because the growth profiles are better and the valuations look pretty reasonable. And so from that perspective, it's watching the liquidity aspects of investing, and more broadly, what's the path of interest rates? What's happening with inflation? How sticky is it? And most importantly, and the thing I think I kind of anchor to the most, it's just about unemployment. So when you start to see that moving, that's worth thinking about and thinking through and how that might flow through the rest of your portfolio.
And just getting back to the fund, what role do you think it can play in an investor's portfolio?
Yeah, so the way that we try and look at things, it's a differentiator. So it's going to give you different return and different risk measures than other parts of your portfolio. We think about it as a satellite, right? It's a small part of the portfolio where you're putting some money to work with an active manager because they can go out and take full advantage of an inefficient part of the market, and they can deliver you long-term capital growth in a structure where the risk is diluted because you're running a portfolio of these positions. You're not an all-in bet on a single theme. So we kind of look at it as satellite exposure, looking for that long-term capital growth, providing a bit of differentiation to your broader portfolio, but also investing in some early stage businesses, which are pretty exciting, and being part of that aspect is really interesting too. So that's how we try and frame it when we're thinking about where it fits for investors.
And finally, where can investors get more information about the funds?
So best place to start is Yarra Capital Management's website, yarracm.com. Lots of information, lots of links in there, but that's the best place to start.
Joel, thanks for joining us.
Thanks, Tom.
Thanks for watching. Make sure to check out our YouTube channel for more great videos.